224,000 jobs are added in the labor market in June, a strong comeback with low-paying job. The U.S. economy added 224,000 jobs in June, a strong comeback for the labor market after a disappointing May.However, how about the salary of those jobs? Those jobs report are so much less value than 15 years ago. Last year a college graduate landed a $25,000 a year teaching job. She cannot afford her own place. Taxes, high rent, loans, cost of living eat up all her net income. The report just shows the remarkable numbers in job raise, but do not mention the minimum wage. Many people said that they have to do the second job to afford house, food, health insurance and maybe the internet. Ramon A. Cardona said, "These jobs reports are of so much less value than 15 years ago. Last year a college graduate I know landed a $25,000 a year teaching job. She cannot afford her own place. Taxes, high rent, loans, cost of living eat up all her net income. Is this job report out of date?" Yes, it is. People replied her comment, "Job numbers are high, but what are the quality jobs, and are people able to meet their demands? I think this is not a great measure of a booming economy." Gloria Lee said, "At $8 an hour, everyone needs 2 jobs to live." Hannah Barra also gave an opinion about the low-paying job. "If we don't have enough children to fill the entry-level job we had and not enough low-paying jobs that aren't entry-level and less good-paying jobs, why would they add more entry-level job? And that many more? WTF. We have a very large population of educated people who can't get decent-paying jobs because there are not enough, and we graduated with college debt too. This is not right." The unemployment rate rose to 3.7%, the highest level since March 2019, but still historically low. The number substantially beat the expectations of analysts, who had forecast a drag on jobs because of business uncertainty around high trade tensions as well as a lackluster housing market. Adding to the positive story, 335,000 people entered the labor force in June, substantially more than usual, which may have been what pushed the unemployment rate up slightly. It's a remarkable feat for an economy that has been soaking up workers for 106 straight months, and an indication that people are still finding reasons to go back to work. Economists surveyed by Dow Jones had expected non-farm payrolls to rise by 165,000 and the unemployment rate to hold steady at 3.6%. May's initially reported growth of 75,000 had raised doubts about the durability of the record-setting expansions that began a decade ago. The May count was revised lower to 72,000. Federal Reserve policymakers have been watching the jobs numbers closely. Markets have been widely anticipating that the central bank will cut its benchmark interest rate later this month, regardless of what the June payrolls count showed. The stock market opened lower as investors contemplated what the report might mean for expectations that the Fed will be cutting interest rates later this month in an effort to stave off a widely expected economic slowdown through the year. Government bond yields surged, with the benchmark 10-year note up nearly 10 basis points to about 2.05%. The report would seem to make a mockery of market expectations for a quarter or half-point cut at the July 30th to 31st meeting of the Federal Open Market Committee, said Andrew Hunter, senior U.S. economist at Capital Economics. The level of job growth, he added, is still much stronger than the levels that have usually prompted the Fed to cut rates in the past, and, although we do still expect the weakening economy to prompt the Fed to loosen policy, the first rate cut will probably be delayed until September. Market reaction shifted abruptly after the Bureau of Labor Statistics release. Traders moved the possibility of a 50 basis point cut to 8% from nearly 30%, though 100% expectations for a quarter-point cut remained firmly in place. President Donald Trump has been sharply critical of the Fed and repeated his previous sentiments later in the morning. "We don't have a Fed who knows what they're doing," Trump said, adding, as he has in the past, that the economy would take off like a rocket ship with lower interest rates. Professional and business services led the job gains with 51,000, while healthcare added 35,000 and transportation and warehousing contributed another 24,000. Construction also added 21,000 and manufacturing, despite teetering on contraction recently, saw another 17,000 jobs added, above the 8,000 per month average in 2019 and getting closer to the 22,000 a month in 2018. The number looks more like the robust 2018 monthly job gain average than the lower average so far in 2019, forestalling concerns about a sharp slowdown even as indicators of business sentiment have turned negative. However, there are still signs that the labor market won't go back to last year's blistering pace. Daniel Zhao, senior economist with the job search and review site Glassdoor, says employers' hiring needs aren't growing as fast as they had been. The number of job openings is very healthy, pretty close to historic highs, but the rate at which it's growing is slowing dramatically, Zhao said. When that year-over-year growth rate in job openings turns negative, that will be a major signal that the labor is slowing down. The largest employment gains came in healthcare and professional and business services, although manufacturing turned in a robust 17,000 jobs after 4 months of little change, a surprise turnaround for an industry that has been flagging with higher raw material costs due to tariffs and the downturn of world trade. Retail employment showed little change again in June, though transportation and warehousing, which can be a sign of consumption migrating from physical stores to shopping online, added 24,000 jobs. The one still disappointing number, average hourly earnings, which rose 3.1% from a year earlier, slightly lower than forecast. While still beating inflation, wages should be growing faster this late in the business cycle, as employers compete to attract workers. Manufacturing activity of late has been showing signs of contracting as corporate executives complain of increased prices due to tariffs the U.S. has imposed against its trading partners. Today's jobs report shows the U.S. economy continues to create jobs at a strong pace even as we enter the longest period of economic expansion on record, said Tony Dikian, head of global markets at Citizens Bank. The bounce back in the June jobs number may splash cold water on the notion of an imminent Fed rate cut. We will have to see whether the equity markets can shrug that off when balanced against other macroeconomic factors, such as the hope of a China trade truce. In addition to the downward revision for the May report, April's count fell to 216,000 from 224,000. Despite the positive news for the economy, markets opened down on Friday upon the realization that the Federal Reserve would find little justification in the June jobs report to cut interest rates substantially at its next meeting.